Today, in this video, we're going to try and understand what are money market instruments and the features that are related to money market instruments. Moving forward, we'll first understand what is money market instrument mean and the features of money market instruments. When we talk about financial markets that operate in India, we can basically define the financial market as a place where instruments are being bought and sold, either for a short-term period or for a long-term period. Money market is a place or a segment of financial market where short-term instruments like bonds, debentures, call monies, treasury bills, etc., are being traded for over a shorter period of time. In case of money market instruments, the instruments that are traded in these money markets have a short-term maturity period, usually ranging within a year. That means the maximum maturity period of any money market instruments that are traded in the market is for a year. And the another difference between investing into capital markets and the money market is that when you invest your money into money market instruments, the amount invested into money markets are considered to be safer than investing your money into capital markets, because all money market instruments are majority being issued by the central bank of the country, which is safe and secure. All the money market instruments that are traded in India have a fixed rate of return to be offered, which offers you a moderate return than compared to capital markets. So it deals, all the instruments that are traded in the money market deals with a highly liquid fund and also has a low financial risk when compared to other instruments that are traded in the capital market. This becomes the basic difference between investing money into money market instruments and investing our money into capital market instruments. Again, just to have a quick report, money market instruments are those instruments, or it is a marketplace or a segment of the financial market where, as investors, we could buy any kind of short-term funds that are being traded in the money market. And the majority issues the instruments of money markets are the central banks of the country, the governments when it is in need of funds, and therefore these instruments offer the investors moderate rate of return, and hence it is considered as low risk financial instruments when compared to investing money into the capital market. It also serves as a platform for meeting short-term financing needs and investing needs by individuals. When we talk about money market instruments, we have n number of money market instruments that are traded in the market, where the majority of the participants of money market instruments are bankers, investment banks, insurance companies, mutual fund companies, non-banking financial companies, RBI, or the government organizations. The only instrument that can be purchased by the general investor like us is treasury bills, which is offered on an equal term basis by the RBI. When you look into the treasury bill investment also, it has a maturity period of less than a year, and it offers a moderate risk to the investors who are investing into treasury bills. Now, the point to be noted here in case of money market is that there is no physical place, but a network. It does not have a physical place where you could buy and sell any kind of short-term instruments, unlike the capital markets. Because when we want to try and buy or sell instruments in the capital market, we have stock markets that are very active in all over the country or all over the world, where you could buy and sell a number of stocks through the stock markets or capital markets. Where in case of money markets, there is no physical place existing as such where you could trade on. Therefore, it is a network of financial institutions, dealers, and brokers who act as a major participant of money market instruments. So, moving forward, we will understand on what are the features of money market instruments. The first basic feature of money market instrument is that short-term nature. As we've already discussed, any money market instruments that are traded in the market have a short-term maturity. Therefore, the maturity period of all kinds of money market instruments ranges up to 1 year. So any instrument that you are buying in the money market, let it be a call money or a treasury bill or a commercial paper has a maximum maturity period of 1 year. So that becomes the primary feature of money markets. The second feature of money market is said to be that these instruments are highly liquid because of the maturity period that it possesses. All the instruments that are traded in the money market can be quickly converted into cash within minimal cost. So even if I want to sell back my money market instruments within the maturity period, I can very well transfer it to someone else and by making it liquid or converting it into cash by having a minimal loss perception because I got it liquid for the maturity period to come. Therefore, we say that all money market instruments are highly liquid in nature. The third feature of money market instrument is that the risk involved in investing money into money market instruments are very less when compared to capital market instruments. This is because of the short-term nature that the money market instrument possesses and also because of the liquidity quality that the money market instruments possess. Any money market instrument that you buy let's say a treasury good, which is also called as gilt-edged securities or government securities that are issued basically by banking organizations or by the central bank of the country, has a fixed rate of return that is to be offered. Let's say I'm purchasing a treasury bill of 81 days or 182 days or 91 days, or the maximum maturity period of treasury bill of 365 days. All these treasury bills has a less risk that is involved because at the end of the maturity period, all these treasury bill instruments offer me or guarantee me a minimum percentage of return that is to be provided. The next feature of money market is that it is a wholesale. That means the transactions usually take place at large volumes. It doesn't mean that I buy one treasury bills or three treasury bills that are issued by RBI. I purchase a lot of treasury bill instruments that will be issued by RBI. Or when one bank approaches another bank for a call money to be purchased, they usually demand a huge amounts of money to be transacted between them. So therefore, whatever happens in the money market, it is considered to be a wholesale market because the transactions that take place in the money market is a lump sum amount, or it happens only with large volumes of trade. The next feature is, as I already told you, there is no physical location. Therefore, anything that happens in the money market is over the telephone or the electronic platforms that are digitally available as per the government initiative. We know that the government of India is taking a lot of initiatives for digitalizing all these concepts into financial industries with the help of fintech applications and other revolutions that are happening on the financial sector. There is a physical existence or physical location that is actually present and defined where a money market will be traded because the transaction takes place through the help of banks, brokers, and dealers. Therefore, we say that there is a physical location unlike the capital market for any kind of money market instrument to be traded. Next one the next feature talks about the participants of money market. So, if you look at the participants of money market, they are basically banks. It can be a public sector bank or a private sector bank or a foreign bank of money. It could be financial institutions, it could be corporate organizations, it could be governments, it could be mutual fund companies, it could be insurance companies, it could be investment bankers, etc. But when it comes to money market instrument investing, very few people like general public try to invest into money market instruments. And the only instrument that as a general public that I could invest is treasury bills when the RBI gives us a notice that the treasury bill is being invested. So apart from treasury bill, the other instruments of capital market, namely commercial papers or call money market, all these instruments are being traded between banks and financial institutions that operate in the country. The last feature of money market instrument is that it's regulated by the central bank of the nation. So any money market instruments that are traded in India is all regulated and formulated by the central bank. That is, only with the approval of the Reserve Bank of India, any kind of money market instrument will be issued because the major reason being all money market instruments have a fixed rate of return to be offered between the parties who buy and sell a particular money market instrument. So this rate of return is to be determined by RBI based on various macroeconomic factors that have an impact on the economic development of the nation. Therefore, without the approval of the RBI, none of the financial institutions or government, like be a state government or a central government, can issue any kind of money market instruments. Hence, these becomes the basic features of money market instruments, having short-term liquidity, high liquidity, low risk, wholesale market buying where large volumes are being traded. There's no physical location for a money market unless like capital market. The participants of money markets are slightly different from that of the participants of capital market because it includes only bankers, financial institutions, corporates, governments, mutual fund customers, and insurance companies. And moreover, all the money market instruments that are traded in India are regulated by the Central Bank, which is the Reserve Bank of India. So hope this video gave you a quick understanding on what are money market instruments and the features that are related to money market. Thank you.